Hello, everyone, and welcome. My name's Alex Beard, and I'm the Associate Director of Alumni Career Development at William & Mary. We're glad you could join us for today's session as part of Professional Development Week. Our goal this week is to offer practical, accessible programming that supports the entire William & Mary community across career stages. Today's session, From Idea to Revenue, the Venture Validation Sprint, is designed to help you think about the validation plan you can use to test demand and decide whether to proceed, pivot, or pause with your venture. Today's presenter is Dustin Dunbar of class of 2009. Dustin is a venture capital partner at Virginia Venture Partners, where he invests in early stage tech and software companies headquartered in Virginia. After graduating from William & Mary, he served as a logistics officer in the airborne infantry units and 3 deployments before transitioning into venture capital in Richmond. He now evaluates hundreds of startups annually and brings that insights to today's workshop. With that, I'm happy to turn things over to Dustin to get us started. Thanks, Dustin.
Thanks, Alex. I'm not a partner yet. Fingers crossed one day I'll get there. Appreciate it though. You know what? You just gotta commit to it, right? So fake it till you make it, as they say. So I'm gonna pretend like I'm a partner today. But yeah, no, I'm really happy to be here. Thanks for having me. Really, I know Alex kind of talked a little bit about it. I will preface before I start. You might hear some young ones asking for some snacks. So I've got like some snacks preposition over here because they're home today because they're sick. So you just got to roll with it. So yeah, really kind of where I want to start off with is I know that you have spoken kind of like about ideas, ideation, what products look like. And so really when we're talking about validation and how to kind of validate your idea, it could be really, really simple. There's this really extraordinary story. I think it was Peter Thiel or Mark Andreessen when he was talking to a future entrepreneur and he was asking her and she was in college, like, hey, you're talking about like renting out clothes, kind of creating a market space to rent clothes. And he asked what her MVP was. And she was just like, oh, I got to build it. So I got to build it. I got to put it online. He's like, no, your MVP could be as simple as just hanging out clothes outside of your dorm room with a sign that says closed to rent, right? That's how gritty and dirty an MVP can be. You think that there's a problem and now you're trying to address that problem with the solution. And so your MVP can be as simple as that, as just a simple sign hanging outside of a dorm room. So really, when we're talking about problems and solutions and the idea that you have to fall in love with the problem. You got to fall in love with the problem. You cannot fall in love with your idea. Because what ends up happening is if you fall in love with your idea, you get stuck on it and you think that this is the only way that could solve the problem. And the issue with that is that you have to consistently iterate on your idea to make sure that you are actually that you're actually truly solving the problem that your customers are having. And so when I'm talking about the problems, you got to start with the customer, right? And if you can't clearly name who has the problem? That's the customer, right? So you need to know what your ideal customer profile looks like, and you have to be able to describe that in like a single sentence and know that like at your core, right? And because that is really where you're going to kind of pivot everything off of is what your customer is, who they are, what they're doing day to day, and what they need and what they want. And there's a big difference between need and want. And so if you can't clearly name the person who has the problem, how often, what it costs them, being like time, money, risk that they assume, then you really just don't have a problem. You just kind of have like an idea of a vibe of a problem, right? Like you actually need to identify the problem. And then that way you can actually just, kind of look at, all right, who my ICP is, and now I have a problem. So how are you validating that problem? Well, there's kind of like four different ways that you kind of like four different levels that you work through is, people are complaining about it, right? They've tried to solve it. So what kind of workarounds have they put in there? And then they're paying for those workarounds or they're paying extra time, they're doing extra work, and then they've actually commit to a next step, right? That's you. Letter of intent, like let's try a pilot. So, I don't know if you've really kind of talked about customer discovery and what that looks like, but I'm going to talk briefly about customer discovery when it comes to what your MVP is and what you're kind of developing within your idea. And if you're explaining the idea, then you're going to get lost with your customers or your potential customers, rather. You need to understand their behavior, right? So you need to ask about the past and not really the future. And what I mean by that is you can't be asking, like, would you use this current idea that I have? You need to say, hey, tell me the last time you had this problem, right? And run that down. Like, How often do you spend time on this problem? How much would you pay? Right? Like that's really the biggest thing is, and so you'll hear these like red flags, green flags. Like a green flag about you understand the problem, you've got a good idea is, hey, we built a spreadsheet, we hired somebody to kind of really just look at this. It happens every week, every day. This costs us money. A red flag is like, oh, that's an interesting idea, or I could see that being useful. That doesn't help you, right? You really need to understand the problem and not your idea. That's the big thing. So really, you got to understand the severity, the frequency, how the willingness of them to like pay for it, and then who has the authority to actually budget for to pay for that as well. And so you can really based off of that, you should be able to take your MVP and get that done within like a week, 3 days, really. So that's the big thing is like your MVP needs to be really, really quick because if you're able to demonstrate that you could ship something quickly, then you're going to be building momentum. And that's what can lead into fundraising, right? So if you are able to really build it out and build it quickly, and then you have to turn around, you have to iterate. So that is where you're really kind of seeing the validation from your customers, and then they're getting that feedback loop from them and saying, "Hey, actually, what about this? What about this? Can you add this? How about this?" Actually, it's not really solving the true problem. It's actually solving a different problem, right? And so you just continue iterating on this MVP until you got like a full actual blowout of a product that you are really able to ship. And then before you ever take VC money, is do you have the demand? Like you have to have those signals of demand because if you've got customers, then you've got demand. And customers can be pilots, it could be letters of intent. If you've got customers, you have demand. And that's when you can actually get venture capital, right? And because what that proves is if you are reaching customers, you have some sort of demonstrated knowledge of the channels to get to those customers. If you just have a problem, a solution, and an idea, and you've got a product, but you don't have customers, venture capital money is not going to help you because you just have a product. What distribution does is distribution makes it real because now you're able to understand how I'm getting there, how I'm getting in front of them, and then you can understand, okay, if I double my spend on this distribution lane that I currently have, am I going to double the outcome? Am I going to get more customers to come in? Am I going to be able to acquire more than I'm actually paying to acquire? That's, what the cost acquisition or customer acquisition cost, right? And then the CAC payback. So that's really what it comes down to is what venture capital is looking for is do you understand the problem like intimately? Understand the problem. Have you lived the day in life of the customer that you're going after? Are they willing to pay for it? How much are they willing to pay for it? How often are they willing to pay for it? And then are you truly, truly getting after them? Like, do you know where they live, where they're working, how they're interacting with each other? And then do you have those distribution lanes as far as like, I'm getting after them through direct email, I'm getting after them through direct paid ads, I'm getting after them through word of mouth, or am I getting them through like stickiness of the product and is it a product-led growth? So that's really kind of the down and dirty when it comes to what venture capital is looking for. So when we come in at the early stages and we see that you have distribution, even a small amount, we are able to see that you actually understand your go-to-market motion. And what I mean by my go-to-market motion is like how I'm going to expand my customer base and get that initial wedge. Because marketing and advertising are completely two different things that fall within the go-to-market. And so those are just tactics, right? So your marketing is just like, hey, how am I looking at my customers? Advertising is how my customers are looking at me. Go to market is that whole thing encompassed and like how you're acquiring your customers, that whole strategy of actually acquiring your customers. And so, just telling me that, hey, we're just gonna, do stuff on TikTok or Instagram, get through some influencers, that's not a go-to-market motion, right? That's just a paid advertising, right? That's not go-to-market. So that is what we're looking for. We're looking for that distribution. And then what we really want to see is whether or not people are actually paying for that MVP. So I know I just went over like a lot within like 10 minutes there. So I'm really happy to kind of just answer some questions because that's what I'm really, really good at. So, and I see something in the chat
Yeah, I was
though.
gonna say, Dustin, I've got a question for you here from
Yeah.
the audience. So What are some effective strategies for getting potential customers to actually talk to you early on? Like, for
Mm.
example, you got a list of emails, are there specific approaches or elements in that cold outreach that tend to generate better response rates or maybe look more promising to you as, from like a VC end?
Yeah, so I think cold intros are always hard, unless you're in person. That's always going to be difficult. I had a friend that was building on an app, and she asked the same question, and I told her literally just go to Starbucks and post up at Starbucks and offer to pay people for their coffee if they'll sit down with you for 5 minutes and talk about the problems that they see if they have this problem, and then just kind of even just iterate on the current solution that you have and see if they'll actually enjoy the experience of your app right then and there. So I think cold intros are really hard. I think it's really best, if you truly understand the customers, you already kind of have interactions with the customer. And so just kind of developing that network through those first initial people and then just asking them, hey, is there anybody else that you think I could talk to? Like, who else do you think I should speak to about this? And is there anybody else in your realm that is able to, I guess, is there anybody else in this realm that you think is experiencing the same problem? Right. I think cold intros are always hard. It's that's the most difficult thing. Unless again you're face to face, then it's a little bit harder for them to say no when you're face to face.
Absolutely makes sense. So, from an investor's perspective, what constitutes a strong MVP? So, like, especially for software-based ventures, how should founders start to think about the right level of fidelity before testing with customers?
Ooh, that's a really good question. I think that it has to just be, I think really it's got to be able to, I think when it comes to apps, you can put in like fake data and stuff like that. If it's a data visualization, if it's an actual like software, like AI infrastructure layer, then you got to be able to show that the data is actually executing on something. So it really depends on like what the software actually is. If it's an app, it's just, hey, these are the wiregrams that, this is what it looks like. This is how the UX goes through. If it's a, dashboard visualization kind of app, then really it's just you got to have that visual up there already, right? And like to make sure that the customer experience works, and you don't need true data for that. But then if it's AI infrastructure layer and execution agentic, then you need to be able to demonstrate that the data you have right now is proprietary and it's actually conducting a really good feedback loop with the transparency. So I think that every single time that you have software, I lump AI in with software, but anytime you have that, you have to have some demonstration, even if it's just dirty, right? You just got to show that you are attempting to solve the solution, because every single time, even if you show it to a potential customer, if you come back to them and you show them, hey, I this was really bad the first time around, but within a week I've got something new. I think that's really, it doesn't really matter how bad it is. I think as long as you're demonstrating that you're maintaining momentum, because if you say, hey, I was able to work on this, I was able to, in this amount of time, I was able to ship this in this amount of time, and then I was able to get these customers in this amount of time. And I got, 3 LOIs within a week, right? I think that's the most important part. So I really wouldn't worry about so much like of how much fidelity I have. Just you have to show that it's working in some capacity.
Is there a volume of LOIs or like, and I'm sure it depends on, how
Yeah.
unique the idea is, but is there a valuation that you all are setting for like a minimum sort of benchmark, or is it really just the quality of the idea, the uniqueness, the market factor?
It's going to be, it really does not, for us at the early stages. So a pre-seed, we don't need a whole lot. We just need to see the signals, right? So that there's some demand signals. We need to know that the market itself is actually large enough for venture scale. And that's not to place a value assignment on whether or not, you should do a startup, right? A startup could be a barber shop. It's all meaningful. But, when it comes to venture capital is a different set. It's a different tool for a different set of businesses, right? So the market has to be extremely big. And by that, I mean, it's got to be $1 billion market, and you have to be able to obtain a certain percentage of that market for a venture capitalist to get those returns out of their investment. So that is the one thing, that's the biggest thing that we're looking at. There has to be demand signals. And then on top of that is we're looking at your domain expertise. And by domain expertise, it is, do you know the customers and do you know their pain points personally? That's the biggest thing. Because in the end, you get to have the sexiest product, but if you're not a good team and you're not a good founder, we're not going to bet on you. And that's what we are. We're betting on the jockey, not the horse.
I love that. Talk to me a little bit more about team composition. Like what are some maybe leadership characteristics or things that you're seeing in those successful startups?
Yeah, I think the biggest thing is coachability, and you have to have conviction that you're going after the right problem, and you are the person capable of doing it. But in the same vein, like you are completely set and confident in your own abilities to know that you have to pivot. Because I swear, every single successful, unicorn company, they've pivoted at some point in time, and you have to be able to see that. Like you have to understand like when I'm going to have to pivot, and you got to be able to kind of innately feel it. So that's what we're looking for is when you are sitting there in a board meeting and everybody is peppering you with questions and you start taking that in and you're like, okay, so you're going after some questions here, like what's the underlying issue that you're seeing? And then people will tell you. And if you are able to take that honest feedback and then construct a new iteration of your product or your business model, that is ultimately what it is. So you have to be adaptable and agile and be willing to take hard lessons from people that, your investors as well as people that know more than you, because that's just the way this business works. It's capitalism, right? You have to be able to, I mean, innately innovate yourself in order to be successful.
Yeah, I love that. And it connects to one of our sessions from yesterday. We talked about feedback, the advantage of getting, strong feedback. Whether you are like you're an individual contributor or a leader of a team, you have to be able to take that knowledge and let it influence the work that you're doing.
Yep.
And I see that being true for this space as well. So you mentioned this a little bit, and I know it's a little bit outside your scope, but one of the other questions that we got was how should a home service business gauge early interest and validate demand when its primary outreach method may be in person, like think like door knocking,
Mm,
things like that.
mm.
This came from a student. So, are there ways to make early validation more efficient when customer time and attention are limited?
Ooh, that is a really, really good one. Yeah. Gosh, that's a really good question. Yeah, because I mean, you don't want to waste your time, beating doors down, right? I think that trying to get an early read on your customers and seeing where they congregate might be the best way to go about that, right? So, if there's, I mean, posting up at a farmer's market, maybe, right? So you got a lot of foot traffic, right? I think that's a good way of doing it. Yeah, you don't want to spend money on mailers. That's a waste of money. I think yeah, really, honestly, that's a really tough question. I think man, I have to think about that one. That's good. I honestly think the best way to do it is just find the foot traffic, like where foot traffic is, guess where your customers are going to be at, and then be willing to like jump around to find those locations versus like going door knocking every single one to validate who your customer really is. So that is man, that's a really good one. Yeah,
Yeah,
I've never thought about it that way. That's a good question. I'm like
your
the
response aligns with what we heard in our session earlier
okay.
today with Graham and Chelsea and Maybelline, literally talking about going to the PX, standing with a clipboard, and just talking to the customer base. I mean, I think that
Yeah.
is it. Like you go to the
Yeah.
farmers market, you engage with your audience, learn from them, figure out what is deficient in your idea or your product. And to your point, it's the same as software. You got to pivot. You got to be able to
Yeah.
adjust your market to fit your market.
Yep.
All right. So, another question we've got here. In a market with strong startup ideas and willing investors or partners, not every match is a good one. From the founder's perspective, how do you evaluate whether an investor or a partner is a good fit? And how do you avoid being overly influenced by excitement of funding or growth opportunities at the expense of long-term alignment?
Yeah. No, so that's a really good question. So I think that really when you are looking at funding, be it, any type of capital, debt, funding from your friends and family, from angels, or institutional and strategics, right? There's always a trade-off, right? And it just if you're giving up ownership, you're giving up control, And so it really is, you're giving up, kind of revenue, right? If it's debt. So I think that really you have to look at what are the options that I am buying with this money. Is it time? Is it talent? Is it distribution? Is it speed? Those are really the four things that you have to, what options am I buying with this money? And then when you're looking at the the investors, and you have to look at it, sometimes it's going to be purely transactional, right? Hey, you believe in me. I think I got a great idea. And those are going to be like your onesies and twosies, kind of some angel investors. When it comes to like a lead investor, the person that's kind of leading the round, setting the terms, you really want to find a lead that knows that industry and that vertical very well. It could be like a previous exit founder, or they have other portfolio companies kind of aligned in those verticals. And the really big thing is they call it value add, right? It's a kind of really, I'm not a big fan of like everybody competing for value add, but really you have to look at how they've gotten other portfolio companies to succeed. How involved are they in the board? What are they looking at when it comes to the board? What are they bringing to the board meetings? Are they bringing solutions, or are they just sitting there just taking in passive intake, right? So it does require some due diligence on your part. Don't be afraid to ask for some intros into their other portfolio companies. Don't be afraid to reach out to them, because this is a two-sided relationship, right? It takes two to tango. And this investor is going to be someone that you're going to be with for 10 years, 15 now, right? So you have to be understanding that this is a partnership that you have to be willing to come into. And so if they're going to put in a lot of time into your board, and they're actually going to bring anything other than just connections to other investors, it's really a deep understanding of how to operate and how to pivot, and what you need to be doing on a constant, consistent basis to grow your company. And that's the best type of investor, who's actually bringing value add.
I love that. I mean, it's a true partnership. It's
Hmm.
a long-term relationship. When you think about that, for ventures that are built around partnerships rather than direct customers, what early decisions would you say matter most for that long-term scalability?
Yeah, I think there needs to be, you need to make sure that your documents are like really good, and that you're not like, it's not predatory. You got to look out for yourself. Um, but really, I think it's just making sure that you're aligned on the outcome, right? So at the very early stages, friends and family, and angel investors are typically the best ones, because there's always an alignment on mission, impact, community, right? And so those are the best ones to take on pretty early. Now, if you're growing, right, and you really think that you can get venture scale, then taking institutionals is another way. It's just you're kind of looking at a different impact, right? The aligned mission is, I'm going to make a giant return for you, and I'm going to make a giant return for myself. That's the alignment there. And then if you're looking at strategic investors, and by strategic investors, I'm talking like I say Lockheed Martin or CVS. Those have venture arms. So there is an alignment there of whether or not you are going to fall possibly within their eventual portfolio company, and whether or not there's an actual alignment on the mission between yourself and them. So that you really have to just, I think alignment is the biggest thing that you have to look at when you take on these partnerships.
We saw a pretty significant drop in the market. I guess it was about 2 weeks ago, like where there's this fear of, you got Claude Code coming out. Oh, software is dead. What's your take on what's happening in the market with AI and like future market scale and opportunity within the software space?
Yeah, I don't think SaaS is dead. To be quite honest with you, I think there's just going to be a different type of pricing model. I think that's really what everybody's kind of looking at, is there's going to be more of like a usage versus a monthly recurring, by seat type model. So I think that's where a lot of this is coming from, is like, hey, I think there's going to be a lot of pivot in how people are pricing these companies based off of the revenue, because the revenue models are going to shift a little bit. And I think that's really what we're looking at. I think that there's a lot of opportunity with software as it is, just because they're going to be taking in, these software companies are going to be taking in AI. They're going to be generating, they're still going to exist, right? Some of them will, get destroyed. I mean, that's just the market as it is. But I think that there's just a really exciting opportunity in how well software is able to operate now and how much more efficiently is able to operate because of the AI infrastructure layers that are now like being laid down.
I love that. We've got another question in from the audience. So, what are your thoughts about funding single founders versus co-founders? Do you all prefer one funding over the other? I'm sure more people in the mix creates more complicated, funding structures and things like that.
Yeah.
You've got more cooks in the kitchen.
Yeah. Yeah, no, I think it's a really great question. I think that when we're looking at single founders, that is like if you are trying to be a single founder for a long time, you have to have a lot of prior experience in running an organization. Have to have a lot of experience in that domain. And so there's a lot of more bases that you have to cover as a single founder, technical, sales, and organizational leadership. I mean, those are really, really difficult things and there are people like that, right? We like to see co-founders because we like to see that kind of holistic approach. You don't want to get too big too early, right? You don't want 4 or 5 founders and you don't have an MVP yet, right? Like that's not good. But 2 founders at their early stages, typically what we like to see, just based off of having one person having the technical knowledge and the other person having kind of that more sales hustle, if you will.
I like that. It's a good balance. Let's talk just for a moment then about what differentiates a strong pre-seed versus a seed pitch from like a weak one. So what are
Mm.
those like real strong indicators for you?
Yeah, so pre-seed is, hey, we know the problem, we know the customers, we have the solution. We just need money to get to more customers, right? That's a good pre-seed. We've got customers, or we've got LOIs, we've got letters of intent. We just need to get to them, and we need to service them, right? We have the demand, we just have to meet the demand. And then when you're talking about seed is you have a lot more revenue, right? But hey, we've really got this product market fit. We truly understand that this is it. Now we really just need to speed up our distribution. And we know what the distribution is going to be. We just need to speed it up because that way we're just going to really acquire more customers, right? And then you'll lean into the Series A, which is we have a lot of recurring revenue. Now we just need to get big, right? And that's where you have these kind of larger funding rounds. So yeah, definitely pre-seed is you've got the MVP, you just got to meet the demand from your customers. And then you've got at the seed, it says you've got customers and you've got them recurring at a very good clip. Now you just need to speed up your distribution and so you can get more to get to that Series A.
Love that. And I mean, I know you've funded a lot of different companies and startups. I would love to hear from you. Do you have any examples, or can you share a moment when timing mattered more than maybe
Mm.
the idea? Like it's like right fit, right time, right place. All of those things sort of come into that sweet confluence.
Yeah. I mean, there's a couple ones where, I think that you had a lot of companies coming in that were more like AI wraparounds. So you had a lot of companies that were really just kind of doing a wraparound on an app versus like an actual infrastructure layer. So those were always these kind of like, that's just bad timing, right? Because people were trying to take advantage of the, first initial outburst of AI being regularly used as consumers. And then there's kind of like the right timing, right? Where we had this robotics company that's like, hey, there's all this regulation getting pushed down on, these energy companies and how they're holding fuel and oil. And there's all these kind of different regulatory requirements that they have to meet in order so that they don't have to pay these hefty fines. And they had the right equipment at the right time to help these people get past those regulations, not get past the regulations, but to help them meet the regulations in a healthier, cleaner way, right? And so that's just it. Sometimes timing is everything, right? Sometimes it's just, it is what it is. That's not to your fault or anyone else's. It's just that's the market.
Yeah, absolutely. That makes sense. What's on your bookshelf? Like, talk to me about if is there
Oh, man.
are there some authors that you would recommend folks read? I'm early days in my startup. I'm not really sure what I'm doing. I feel overwhelmed. I think that's probably a pretty consistent trend, and something we
Yeah.
definitely heard in our session earlier today, where folks have the ideas, but they're looking for more resources.
Yeah. So, I mean, I think the best, to understand venture capital, if that's like the realm that you're trying to get into, I think Secrets of Sand Hill Road, I think is like Scott Cooper, I believe. I think that's the best one for understanding the venture capital world. I think then there's the Lean Startup. Yes, the Lean Startup, the Startup Playbook by Rajat. Oh my gosh. Oh man, I'm blanking on his name. But yeah, so the Lean Startup and the Startup Playbook. And then I just a personal favorite of mine to kind of I think just a little bit more meta is Winners Take All by Anat Giranhadas. I think I said that correctly. That's a really good book too to kind of understand the whole kind of startup ecosystem. But yeah, those are kind of the four that I would recommend.
I love that. Talk to us about your journey into venture capital. I'm sure we've probably got some folks on the call today that are interested in following in your footsteps. We've got plenty of students that are joining us. Would love to hear sort of what was your journey like, and any tips and tricks as folks maybe look into this industry.
Yeah, so I'm not gonna lie, it was a little tough for me. I was transitioning out of the military. Everything they tell you about transitioning is a lie. So it was difficult, right? I went from a life where I knew exactly where I was going to be every year. I knew what my promotion timeline was going to be. I knew what my next position was going to be, to having the utmost freedom of deciding where I wanted to go, which is exciting and scary at the same time. What I learned was you have to really kind of, from my perspective, it's what are your values, and are your values aligned with the position of the job? And so I was really interested in finance because I found myself just going down rabbit holes on like what mortgage payments were and how that was operating, and like how a mortgage rate was decided, and then understanding the mechanics of that, and then understanding how those were set by the market. And so I just found myself really just loving that and the idea of private markets. So I was like, okay, finance seems like I could really get into finance. Standard like thing. Oh, military officer, get into finance, right? But that's just where I found myself being drifted towards. And so I find like my tip is like if you are finding yourself drifting towards one area, just explore it and then don't be afraid to pivot. Like I went into Capital One looking at commercial banking. And I realized, this isn't what I want to do. And so I started talking to other people within finance world of saying, well, maybe what am I actually really excited about, right? And so I started looking at investment banking, private equity, and venture capital. And there's nothing wrong with the other two. I just found that the idea of venture capital was really enticing because I was going to be able to grow with startups. I was going to be able to learn alongside them, and I was going to be able to kind of grow, not really my brand, but just grow my network, if that makes sense. And just to be able to make connections for people, to introduce them to other people that can help them grow. I found that to be really more transformational than transactional, which is what can happen a lot in the finance world. So that's where I found myself leaning towards. Now, if you're looking to pivot and if you're looking to actually get into the workforce, do not just blanket apply. That was my biggest issue. You have to network. It's all about who you know, not what you know. Everybody's going to say this. And so you can't be afraid to crash the party. I remember one time I was I was trying to get into finance. I was still in the military, and I saw something from the American Capital Growth Conference, and it was here in Richmond, and it was a happy hour. And I was like, you know what? I'm gonna go talk to these people. It was a bunch of like regional town bankers, right? I just wanted to talk to them and see what was what about finance. So I was a little shy, so I asked my wife to come with me. So we crashed this happy hour. I met a couple of people from William Mary, and then they just, say, hey, let's introduce you to these other people. And you're just always making the ask of like, hey, who else can I talk to that you think it would be like could be of interest to me that could possibly help me learn more about this stuff, right? And so don't be afraid to crash parties. Just show up if you know where it's going to be. You'll pay the entry fee, but it's so worth your time just to get in there and talk to people to see whether or not that's actually something you'd be interested in, right? And the only reason I got a job at Capital One is because I crashed a party and Jim Newcrop was there. And he made an introduction to me for me to someone at Capital One. That's what happens.
That's the
So
power of the one network. I love
yeah,
that. I love
exactly.
that. And what you all cannot see if you're not looking at Dustin's LinkedIn is the beginning of Dustin's statement there, like so on brand. Dustin, his LinkedIn. I'm going to read this exact quote on your bio, which is. You've read Commonwealth a couple times now. That's what I wholeheartedly believe in. Commonwealth. I'm looking for transformational, not transactional relationships that will fuel our overarching mission to drive innovation and economic growth within Virginia's vibrant tech sector. You're hitting it. I mean, that idea of transformational, not transactional relationships, like that is through and through. I think this idea of, putting yourself out there, being bold, being a little bit brave, that is tremendously important. And it probably
Mhm.
translates. I mean, the pitches that you receive, probably the ones that stick their neck out a little bit more and maybe have a little bit of a riskier idea, are ones that, can draw in some interest. I love that.
Yeah, yeah, exactly. I mean, it's risk return, right? The higher the risk, the greater the return. So no, that's exactly what it is. And I mean, the whole transformational transactional thing was just something I learned in the army, right? Like transactional leadership is you're always going to get what you put into it versus transformational, which is if you're putting your time into other people, you're going to get that back tenfold. That's the way, that's what I learned at least.
I love that. If there are any other questions from the audience, feel free to drop them in the chat. We've got a little bit more time left today. If anyone has any other questions, I'm looking through my list here because I've got a couple that I preceded
Ooh.
that I also wanted to pull out.
Got one from Juliet here.
Yeah, yeah, yeah.
Where do you see more traction in the deep tech area? Okay. Yeah. So I think really what we're looking at from like deep tech, I think that climate is going to be a big one. Definitely seeing a lot in climate. I think that the defense sector right now is just massive when it comes to Virginia. So I really, really do see that kind of more in the deep tech. I'm also seeing quite a lot in kind of the robotics area, as far as robotics mixing with AI and what that daily use looks like. So like kind of like in practice, what AI looks like in practice with hardware. And then there's one more thing. Oh, advanced manufacturing. I think advanced manufacturing is huge, especially here in Virginia. I think that there's kind of getting these little centers kind of set up because this used to be like a huge textile industry state. So I think that we're going to see some more advanced manufacturing as well. Hmm. William Marion versus VIPC. We're both funded by the state, if that's what you're asking. So best way to describe VIPC is we are a state-funded venture capital arm for Virginia. And we receive our money from the Commonwealth, and we also receive our money from the federal government to make investments. We are an evergreen fund, which means that anytime we seek a return, we don't get carry, so we're not getting a bonus. Those returns get put back into our pot so we can now make larger or more investments in Virginia startups.
Talk to us a little bit about that. What are you seeing in other states? I mean, Virginia has always been a little bit on the cutting edge, especially in the
Mhm.
startup space. We're a very innovative and robust Commonwealth in terms of new ideas and growth. What are you seeing, in terms of the market writ large?
Yeah, so I would say that we're not the only ones with kind of a venture arm. We are one with it's a very robust one. I would say that ours is very robust, and we're not only doing direct investments, but we're also doing indirect investments. And by that, we are taking limited partnership allocations. So we're allocating money to other venture capital funds that want to invest in Virginia startups. So really, we're being very catalytic of bringing outside capital, hoping that, outside capital can really help grow companies as well as attract companies to come into Virginia and start up jobs here. So really, I think that when it comes to the overall kind of creating a dynamic appetite for tech in Virginia, I think there's really some interesting industries that I think are going to grow here in Virginia. I think that because of Hampton Roads, supply chain and logistics management is going to be massive for the Hampton Roads area, just because of the Port of Virginia and all the inland ports that go throughout the Commonwealth. BioLife, Life Sciences, another huge one. You got VCU, the Massey Center. You got UVA, Roanoke with the Carilion Clinic. So there's some really big ones, in, that cybersecurity. That's huge, just because the proximity to power in Northern Virginia. I think 25% of our portfolio companies are cybersecurity companies. And then we're seeing a large push in the defense sector because of this need to reindustrialize our military sector and bring all that stuff back home as far as our manufacturing is concerned, as well as like what it looks like to create a more dynamic, um, iterative process around defense procurement. So I think the defense sector right now in Virginia is something that Virginia really has the right to win at.
And if I'm an alum and I'm currently living in California, but I'm thinking about making a move back, how does your funding work in terms of will you take pitches from individuals who are currently outside the state, but with an idea or a vision of relocating their company into Virginia?
So we have to see them move here first. Like we'll have those discussions, right? But before we can ever like put money in, they have to move here. That's typically how we'll have it. But I mean, we always love talking with people that want to come back to Virginia because we help people. We try to broker introductions with the EDP, which is our kind of like sister organization, Virginia Economic Development Partnership. They're always trying to attract companies to come back to Virginia and set up shop here just for, that create some, jobs. It's all what it's about for that tax revenue, right? But we really do want to bring companies here. So we're happy to have those conversations, but they have to be residing here and be committed to staying here for 3 years post investment.
That's great. Any other questions from the audience? We'll do a last call. If anyone has any other lingering questions, you can feel free to drop them in the Q&A. But this has been just a really enlightening conversation, Dustin. I know I've learned a lot as someone who has a startup, but it's not in the software sector. It gives me a lot to think about. It's very fascinating.
Yeah, yeah. Well, what are you working on?
So I have a small applied improvisation and design thinking facilitation organization. So I
Very
help people
cool.
with, like creative ideas, and I bring a lot of that to my work here at William and Mary too. So really
Awesome.
fun stuff.
Very cool. Well,
Yeah,
I'm working on my own startup. I recently started doing candle making. So
I love that.
uh,
That's awesome.
many
All
different.
right, we got
Oh,
one last question here. So what's the
yeah.
main difference between being funded by the state versus your typical VC?
Yeah, great question. So I think with the funding we are still a venture arm, right? So we still come at it from a venture capital perspective, but we're willing to take on a little bit more risk than your typical VC. VC is still taking on a lot of risk. But we're placing kind of bets on the Virginia aspect, right? Because we have a dual mandate. One, it's to, get excise returns so we can reinvest, and two, it's to create jobs and create a dynamic entrepreneurial ecosystem here. So we are willing to take on a little bit more risk for that. The big thing is the reporting requirements are different. We have to get reporting requirements because we are mandated by the legislative body to report back, how much money is out there, how much money you've actually received after we've invested, how many jobs, what's the revenue look like. And the other thing is, if we are investing in you, you have to be here for 3 years. So that's the biggest thing. You have to be here or we call our money back, which that's never a pleasant thing.
Awesome. All right. Well, with that, I'm going to hand it back over to my colleague Kelly O'Shaughnessy for some closing remarks. But thank you so much, Dustin. This was
Thank
very
you, Alex. No, it's been awesome.
Dustin, thank you for sharing your knowledge and advice with the William and Mary community today. We really appreciate the time and effort you've put into preparing for today's session on venture capital process. And we have a visitor. To all the participants on today's call, we expect you've gained a new perspective on being able to tell your story of who your customer is and what problem you're actually trying to solve. What is your minimal viable product actually, and what does it address? What is the problem that you're trying to show that you have a value there? And also need to keep in mind that you got to think through distribution and not just rest on hope and vibes. That was probably one of my favorite parts of the session here. Throughout the week, we are connecting the lessons learned to our core career readiness competencies that we've adapted from the National Association of Colleges and Employers. Today, in particular, we've learned about critical thinking, communication, professionalism, and leadership, specifically your ability to inspire and persuade and motivate both yourself and others using innovative thinking and strengths in planning, initiating, managing, and evaluating projects. You can find a full list of the competency connections and the learning objectives on the website for Professional Development Week, and they'll also be linked in the follow-up emails that you'll receive soon. I now ask each of you to take a minute and write down something you learned today, a next step that you'll take with you. And I encourage you to even find time on your calendar in the next 10 days to commit to doing this. I personally, though I'm not into a startup myself, I can see where making sure I'm considering my audience and that I'm putting the problem I need to solve for them in the forefront of the work that I'm doing is something that I can take into my daily work as well as we plan for the next semester. At this point, I'm going to pass it over to my colleague, Michael Steelman.
Thanks so much, Kelly, and thank you, Dustin, for a terrific conversation, and Alex for a terrific conversation this afternoon, and for all of you for joining us. At William Mary, we are your lifelong career partner, offering continued support, practical resources, and meaningful connections to help you navigate an evolving job market. Before we close, I just wanted to highlight a few ways to stay engaged. First, join us on Mondays from 11 to noon Eastern Time for our virtual career conversations meetups for alumni. These sessions provide a welcoming space to learn about resources, exchange job search strategies, and connect with fellow alumni navigating similar transitions. Second, if you have not already, please join One Network and update your profile if it's been a while. With more than 11,000 members, it is a powerful way to search for and connect with alumni by industry, professional interests, and shared William Mary affinities. Finally, we invite you to attend our monthly online networking hours, including this Friday session at noon Eastern, offering one-to-one speed networking, a simple but powerful way to expand your reach within the William Mary community. You never know who knows who, or how you might both support and leverage the William Mary network like Dustin did earlier in his remarks. Thank you again for joining us this afternoon. We hope to see you at our next session tomorrow at noon, The Price of Ambition, Balancing Career Decisions Without Regret. Take care and have a great afternoon.